Everyone to 9/12 Financial Group's review of the 9/12 Playbook, mid-January 2024 featured investor suggestion. Okay, let's review the mid-January suggestion. Tesla Inc., we reviewed the chart, did our internal analysis, and decided the risk reward was there to suggest entering into a bullish position with Tesla at $212.26. We decided that a good place to put a stop a little bit below the top of the gap following the release of the April earnings beat and set a target to return to where it was trading prior to the mid-October earnings miss. So our stop is 152.35 and our target is 245.29. So using that information, we produced our trade suggestion. Given where the stock is currently trading and our target and stop, we construct the position of buying a June 215 call, selling a June 246.67 call, and selling two June 163.33 puts. Why June? Because we are investing and 6 months is what we target for these investor suggestions. Now, you will notice that the suggestion makes note of a conservative trader. The conservative trader will utilize a stop, but the trade by design does not utilize a stop. When you go into this trade, you need to decide if you are willing to take ownership at the short put strike and how comfortable you are with that risk. It may seem counterintuitive, but featured investor suggestions benefit those that are aggressive with their ownership of the underlying via the exposure to the two short puts. Should the underlying take another leg down after application? Why? Because where the conservative trader locks in a loss at the stop from the increase in short put premium and the decrease in net long call premium, those that hold a position to expiration will benefit from the decay in premium and will only lose by the magnitude of the distance the underlying closes below that short put strike, where he is now an investor. As for maintenance for this position, for the conservative trader, it's remarkably simple. Place an OCO and cancels another. Order to close the entire position should Tesla trade either 152.35 or 245.29 and have bids to close your short units at 5 cents, good until canceled. For the aggressive trader, even simpler, only place an order to close both call units should Tesla trade 245.29 and let the short puts do what they will until you either get them back at 5 cents or they expire in the money and you own the stock. Both would close the long call should it close in the money on expiration day. The conservative trader wants zero residual position at the end of the life of this position. The aggressive trader should only want a residual position should they get assigned on the 163.33 puts prior to closing them at 5 cents. The margin usage should be the margin used to sell two June 163.33 puts. If you would like to reduce the requirement, you can buy further out of the money June puts, the 140s or the 120s, but that would increase the cost of the trade by the cost of two of those units. So this is our starting point. Okay, let's see what happened. You put the position on January 22nd for a 50-cent credit. At the end of January, Tesla closed at 187.29. Your position closed at a 937 credit, and with the 50-cent credit at entry, you were down $887. At the end of February, Tesla closed at 201.88. Your position closed at a 145 credit, and with the 50-cent credit at entry, now you're only down $95. At the end of March, Tesla closed at 175.79. Your position closed at a 1678 credit, and with the 50-cent credit at entry, and you're back down $1,628. At the end of April, Tesla closed at 183.28. Unfortunately, for the conservative trader, they were stopped on April 18th. When Tesla traded 152.35, the conservative trader would have closed their position. They would have bought back their two short June 163.33 puts, bought back their June 246.67 call, and sold their 215 call, all for a net loss of $3,956. The aggressive trader who doesn't set a downside stop still retains their position. The aggressive trader looks at accumulation at the short put strike as an opportunity, not a punishment. The position closed at a 677 credit, and with the 50-cent credit at entry, you're only down $627. At the end of May, Tesla closed at 178.08. Your position closed at $4 credit, and with the 50-cent credit at entry, you're down $350. Going into June expiration, several things occurred for the aggressive trader who would still be in their position. First, you were able to close the short June 246.67 call on June 14th for 5 cents. You did the trade for a 50-cent credit. Now your credit has been reduced to 45 cents. But you then had unlimited upside instead of capping it at the short call strike. Next, after a bit of a rally, you were able to close the 2 short June 163.33 puts on June 20th for 5 cents or 10 cents in total. That reduced your total credit to 35 cents, but what did that leave you? You owned a 215 call for a 35-cent credit. You couldn't lose money at that point. The question was, where will Tesla close when the call expires? At expiration, Tesla closed at 180.301. Your position closed at 0, and with the 50-cent credit at entry minus the cost of the units you bought back, the aggressive trader is still up $35. And here's the lesson to be learned from this trade suggestion. Investing involves looking for good opportunities within the big picture, and good opportunities rarely look good at the time they are presented. The best investing involves initiating ownership when things look bad, identification of value at your entry price, and an expectation of future improvement in value, not in a day, a week, or even a month. And that when we at 912 Financial Group make a featured investor trade suggestion, we operate under the premise that we are 100% okay. In fact, we desire ownership of the stock or index that we are suggesting at the discounted levels the positions would produce should the short puts turn to ownership at their strike price. Sometimes the desire to not lose money costs you more in the end. And in the end, where the conservative trader suffered a $3,956 loss, the aggressive trader walked away with a $35 profit. A $35 profit on a bullish position where the stock was almost $30 lower in the end. If you are viewing this review and are still not sure about subscribing, request a free 14-day trial edition at 912financialgroup.com. Thanks for joining me. Contact us with comments or criticism at 912financialgroup.com. Check us out at 12fin Group on X. Have a great day.